0% corporate tax in Dubai, but what's the actual catch? Here's the truth. Most people don't actually tell you. Yes, Dubai can be a 0% corporate tax jurisdiction, but only if you structure things correctly. In this video, I'm going to explain when corporate tax is truly 0%, when it's not what the 9% tax actually applies to, and the biggest mistakes that cause founders to accidentally pay tax when they didn't need to. By the end, you know exactly where the catch is and how to completely avoid it. So, what's changed in the UAE and what you should really know about? For years, the UAE was known as a zero tax country for businesses. Then in June 2023, the UAE introduced corporate tax, and that immediately caused a panic. But here's the key point: most headlines completely skipped. Corporate tax does not apply to everyone, and it does not start at 9% automatically. The UAE introduced corporate tax to align with global standards, not to kill entrepreneurship. So let's break down how it actually really works. So the 9% corporate tax, let's explain this fully. First, the number everyone talks about, 9% corporate tax, it sounds scary, right? But here's the catch. The 9% only applies to profits above 375,000 AED. So if your company makes less than 375,000 dirhams in profit, your company tax rate is effectively 0%. This threshold exists to basically protect small businesses and startups. So we're talking about around about £90,000 or £85,000. So already many freelancers, consultants, and early stage founders pay basically nothing. Where is this 0% corporate tax? Does it still exist? So now let's talk about where truly that 0% corporate tax is, and it still applies. And this is where things get interesting. If you operate from a qualifying free zone and you meet certain conditions, your corporate tax rate can still be 0%, even above 375,000 dirhams. But, and this is important, not all free zones income qualifies. The government distinguishes between qualifying income and non-qualifying income. And this is where most people unfortunately get it wrong. The biggest catch, what is the biggest catch? Qualifying versus non-qualifying income. Let's get into the details. Here's the catch that no one explains properly. If you're in a free zone and you only get 0% tax on qualifying income, so what is this qualifying income, I hear you ask? Examples include businesses with overseas clients, transactions with other free zone companies, and certain approved activities listed by the authority. What usually doesn't qualify? Direct business with the UAE mainland clients, could be government, certain regulated activities without approval, and poorly documented operations. If you earn non-qualifying income, that portion can be taxed at 9%. So yes, you can still say 0% tax, but only if your income structure supports it, okay? Let's talk about mainland companies and are they taxed, okay? So what are these mainland companies? Mainland companies are effectively, mainland companies are operating on the mainland and they do business, they can get access government contracts, and mainland companies do not qualify for free zone 0% exemptions. But again, there's a nuance we need to cover. Mainland companies pay 0% on profits up to 375,000 dirhams and pay 9% only on profits above that threshold. For many businesses, they're still extremely competitive globally. And mainland companies have one big advantage. They can trade freely anywhere in the United Arab Emirates. No restrictions on local clients. So sometimes paying a little tax actually gives you more revenue and freedom and actually more credibility. Let's talk about what corporate tax does not apply to. Okay, so here's another misconception. Corporate tax does not apply to your personal income, your salary, your dividends in most cases, and your personal bank account. This is corporate tax, not income tax. Don't get it confused. So if you pay yourself a salary from your company, the salary is not taxed personally in the UAE. This is one of the biggest reasons founders basically relocate to the UAE. Let's talk about common mistakes that trigger tax. Let me quickly cover the mistakes I see all the time. Mistake number one is setting up a free zone company, then selling directly to the mainland clients with understanding the tax impact. Mistake number two, mixing personal and business income. Mistake number three, assuming 0% tax means no compliance. You still need proper accounting, financial statements, corporate tax registration, and annual filings. Dubai is business friendly, but not unregulated. It is regulated. Let's talk about the smart way to structure for 0%. And here's basically my smart approach I want to give to you guys. Before you set up a company, you should ask yourselves, where are my clients located? Will I sell inside the UAE or internationally? Do I need maximum freedom or maximum tax efficiency? Sometimes the best structure is free zone company plus overseas clients. Sometimes it's a mainland company plus scale plus low effective tax. There's no one size that fits all. It depends on your company. And anyone telling you otherwise is oversimplifying it. So here is my final summary. And yes, Dubai can still be 0% corporate tax, but the catch is you must choose the right jurisdiction, you must earn the right type of income, and you must stay compliant. Get it right, and Dubai is one of the most powerful places in the world to build a great business. Get it wrong, and you'll pay tax you didn't need to. If you want more videos breaking down Dubai business, tax, and setup without the hype, make sure you like, subscribe, and follow. I'll see you in the next one. Thank you so much for watching.